You're very welcome back to the Grade Academy, where today we're going to look at Lecture 2.2, which is, I suppose, the solution to Part A of the question we were looking at in the previous lecture. Now, if we go back to the question, here was a typical question. The name of the company was Limerick Foods PLC, a company that produces processed foods from the agricultural sector. Okay, you're given all the information like we spoke about. There's the balance sheet and there's the information from last year. The questions we're asked is calculate the following for 2020, the earnings per ordinary share, the cash sales if the average period of credit given to debtors is 1.5 months, the dividend yield on the ordinary shares, the gearing ratio, and how long it would take one ordinary share to recover its 2020 market price based on current performance. Now, one advice I would give any student doing the ratios question and practicing the ratios question is to get 5 figures sorted out before you actually start the question. And what do I mean? Well, what I'm saying is, okay, the 5 figures, the 5 figures I'm referring to is the gross profit, the operating profit, the profit after tax less preference dividends, the ordinary dividends, and the number of ordinary shares. Now, in doing this, you're kind of getting the question underway. You're getting the confidence up. And anyway, these are figures you're probably going to need when you're answering the questions anyway. So I would say the first, if you like, it's the foundation of the question for me to get these figures sorted. So how do we work out the gross profit? Well, the gross profit is your sales less your cost of sales, which is 1.694 million minus 1,120,000, and that gives you 574,000 euro. Now, when I'm doing workings, I often use K, to shorten the thousands. I don't have to be writing out the 3 zeros. Now, I only do this in workings, by the way. Now, next figure I would work out is the operating profit. Now, what is your operating profit? You'll see this in published accounts. Your operating profit, if you like, is the profit before tax and interest have been deducted. Now, in this question, the profit here, the net profit for the year is 64,000, but this is having deducted interest. So what we need to do is add back the interest of 20, and therefore 64,000 plus 20,000 gives you 84,000. The other way of doing that would be to say, right, it's your gross profit minus your operating expenses. Now, your operating expenses were 490,000. So, if you like, if you were to take 490,000 from the 574, that would also give you your operating profit of 84,000. Your earnings figure then is your profit after tax less preference dividends. Now, your profit after tax, well, there's no tax, so your profit after tax is the same as your profit before tax, which is 64,000. Now, how do we work out our preference dividends? Well, our preference dividends is 7% of the issued preference share capital. So 7% of 200,000 is 14,000. So that leaves you with a figure for earnings of 50,000. The fourth figure I would strongly recommend that you work out is your ordinary dividends. Now, your ordinary dividends essentially are your total dividends less your preference dividends. So your total dividends here were 32,000. So 32,000 minus the 14,000 preference dividends, which you've already calculated, leaves you with 18,000. And there's no harm then, the fifth figure is to clarify or to make sure what is the number of ordinary shares. Now, in this case, it would say it's 800,000 divided by €1, which is 800,000 shares. Now, the point here is, normally, you will take this figure, 800,000, as being your number of ordinary shares, but that is if the nominal value of each share is €1. You just have to make sure that the nominal value isn't 50 cents or it's not €2 per share. Like, for instance, if the figure here was 800,000 and the nominal value was €2 here, well, that would mean then that the number of ordinary shares was 400,000. So just be aware, just to clarify, that, yes, the number of ordinary shares is 800,000 shares. Now, when you have those 5 figures kind of established, you're really in a very, very strong position to answer all the questions, if you like, in Part A, but it will also help you strongly in Part B as well. Now, moving on then to Part A, the actual questions themselves. Part 1, you were asked for the earnings per share. Okay, now, provided you know the formula, which we hope you do, it's earnings divided by the number of shares. Well, now, we know the earnings is 50,000, and we know the number of ordinary shares is 800,000. So 50,000 divided by 800,000 gives you 0.0625. Now, that's in euro. So what's that in cent? It is 6.25 cent. The next thing we're asked, if you go back to the question, is what would the cash sales have been if the average period of credit given to debtors is 1.5 months? Well, okay. Well, first of all, anyway, we're given that the debtors' days, if you like. So we need to know the debtors' days formula, which is the debtors over the credit sales multiplied by 12. Now, sometimes you might get the credit sales equal to X rather than having to be writing that word out all the time. And therefore, we know the debtors given to us in the current assets is 23,000 over X multiplied by 12. We know that's equal to 1.5. Now, it becomes an algebraic question then. Cross multiplying 1.5x therefore is equal to 23,000 by 12, which is 276,000. Therefore, x is equal to 184,000. Now, therefore, that's our credit sales, 184,000. Well, how do we get our cash sales? Well, our total sales are 1,694,000, and that's always made up of cash and credit sales. So if we know that our credit sales are 184, our cash sales are 1694 minus the 184, and that gives you 1,510,000 euro. And don't forget to put in the euro sign. And likewise, don't forget to put in the C for cent in Part 1. Next thing is the dividend yield. Dividend yield, which hopefully know, is the dividend per share over the market price, and to get it as a percentage, multiplied by 100. Now, do we know the dividend per share? Well, we're not given it as of yet, but we can work it out. We know that the dividend per share, and even if you, shall we say, hadn't the thing learned off, you'd nearly remember it as it's dividend per share. So if it's per share, it's the ordinary dividends divided by the number of ordinary shares. And we know, we've worked out in the foundation part, 18,000 are the ordinary dividends divided by the 800,000, and that gives you 0.02252. Now, what's that in cent to 2 decimal places? That is 2.25 cent. So therefore, the dividend yield is 2.25 cent. The market value is, we'll say, €2.15. Well, therefore, what's that? That's 215 cents. So it's 2.25 divided by 215 multiplied by 100. Now that gives us 1.0465 to 2 decimal places as a percentage is 1.05%. Part 4 then was the gearing ratio. Now, gearing is the loans plus the preference share capital as a percentage of the total capital employed. And we get that total capital employed figure as the total in the balance sheet. Now, so therefore, the loans, the debentures were 250,000, the issued preference shares was 200,000, and the total capital employed in the balance sheet is 1,318,000, multiplied by 100%, and that gives us 34.14%. And finally then, how long would it take to recover the market price of a share at current performance? Now, when it says current performance, I've spoken about this already, we're looking at the price-earnings ratio. So it's the price over the earnings per share. Now, always be careful and be sure you watch it, that you do have these in the same denominations. Like that we keep these both in cent, if you like. So that's 215 cent, which is the market price, over the 6.25 cent, which was the earnings per share that we had worked out here on Part 1. And as an answer, then that gives us 34.4 years. And like you would get, if you had this practice and you had your system in place, you would get Part A done in 10 minutes So that means you could be picking up 45 or 50 marks in 10 minutes. And I would say it will be the easiest 45 or 50 marks that you will get in the accounting exam. And on top of that, then it will give you time maybe to spend on other questions. Now, I also left you with additional questions for you to practice yourself before we actually looked at this lecture. So how did you get on? Well, let's have a look at it now. Well, the first question was, and that is there done for you, is the operating profit, interest cover is the operating profit over interest. So 84,000 is the operating profit. And that's equal to, 84 divided by the interest, which is 20,000, and that gives you an answer 4.2 times. Now, do you know the formula for the return on capital employed? Do you know the figures that you need to insert? And then will you be able to give your answer? Likewise, return on equity funds. Do you know the formula? Do you know the relevant figures? And then do you have an answer? And both of these will be in percentages. Gross margin. Now, you've seen this in junior cycle as well, but do you know the formula? Do you know the relevant figures? And then obviously a final answer. And finally then, what is the stock turnover if the opening stock was 52,000? Well, once again, do you know the formula? Do you know the relevant figures? And do you have an answer? Well, let's have a look now and see how you got on. Well, the interest cover we have looked at was 4.2 times. The return on capital employed is the operating profit over the capital employed by 100 to give your answer as a percentage, which is 84,000 over 1,318,000 by 100 gives you 6.373. So your answer is 6.37%. The return on equity funds is your earnings over the ordinary share capital plus reserves multiplied by 100. Now the earnings were, and we had that worked out, like I said, the foundation part of the question, 50,000 over ordinary share capital is 800,000. The reserves are 68,000, and that gives you 5.76%. The one little thing to watch here is sometimes students aren't sure, do you bring in for the ordinary share capital, is it the authorized or the issued? It is always the issued that comes into any calculations that you will ever do in your accounts. The gross margin is the gross profit over sales multiplied by 100. Now, we've this worked out, 574,000 over 1,694,000 by 100, and that gives us 33.88%. And finally, then stock turnover, the opening stock being 52,000. Well, the formula is stock turnover is equal to your cost of sales over the average stock. Now, the cost of sales is 1,120,000. The average stock, well, the opening stock is 52,000. The closing stock is given to you in the current assets in the balance sheet at 62,000. So half of that, if those two added together, will give you 57,000. So it is 1,120,000 divided by 57,000, and that gives you 19.65 times. So really, there's part A. That's how you apply the formula. And to be able to do part B, which will be coming to the next lecture, you have to be very comfortable with the formula and how to calculate the figures. And if you do, well, then you're in a much better place to move on to part B to do the commentary. So thanks for watching this Grade Academy lecture 2.2. And in 2.3, next time, I'll be moving on to part B, which is doing the commentary. So for the moment, thanks for watching and happy learning, and keep practicing your accounting. Thank you.